Hello, listeners on Quote Unquote with KK. We come back with one more exciting episode on future of impact capital markets. I have Preet Gowder, who is director at Palladium Impact Capital. If you remember, Palladium used to be the leaders in balanced scorecard. However, Palladium has grown over the years, and I remember working with Palladium when I was implementing world's largest balanced scorecard at Saudi Aramco, which was rolled out to over 150,000 employees way back in the early part of this century. I'm glad to have Preet on the show today. Preet comes with over 17 years of impact capital investments, and he's worked at Palladium Impact Capital, which used to be Include. And prior to that, Preet worked in India with Lok Capital, which is one of India's foremost impact capital fund. Preet comes with BS in engineering from Georgia Tech University and an MBA from Kellogg's Northwestern University. So welcome Preet to the show. Before I let you start, I would just like to make a few announcements. We welcome our audience and listeners from ZEE5 and other platforms across the world. The second announcement is that currently our podcast goes from India to over 175 million audiences across the world. We welcome your feedback and your encouragement, and we continue to have your presence on our show, and this motivates us to go even bringing better content and discussions across various topics on socio-political issues, political issues, and what have you. The reason we selected this topic today and had Preet was a couple of weeks back, Amnesty International in India had their accounts frozen and they cannot operate in India. This sort of political and other interference and their transparency has led doubts about what is philanthropy and impact investing and venture philanthropy and what have you. Just recently, we had been working on, personally, I have been working on the social stock exchange regulation in India. And Oxfam CEO went against an initiative like this. We don't understand why, but he has his own reasons. And Oxfam International just released a report a few days back stating that India is amongst the lowest 4 healthcare spenders in the world, particularly very important during these times of COVID and policy making around healthcare and healthcare spending, which is a subject that is very close to me. However, that's not the main motive and the politics of investing and interference of philanthropy in India. We are here to talk about how do we, in these current times and in future, bring social impact, equality, and all the social issues through impact capital on the ground and make it happen in India. So to start with, Preet, I would like to ask, because a lot of people are confused between what is impact capital, what is venture philanthropy, what is philanthropy, what is CSR. If you could take a minute in guiding the listeners and clarifying their doubts at a basic level, what are we really talking about as impact capital? Over to you.
Yeah, thank you, Kapil. First of all, it's a pleasure to be here, and I appreciate the opportunity to speak to your audience. Let me start by explaining a little bit about who we are. Palladium Impact Capital is an investment bank. We're a very unique investment bank in that we actually work internationally in impact investing. We're focused specifically on impact investing, but our function really involves mobilizing capital from international investors into markets like India, and we work in India specifically as well. A lot of our clients tend to be US investors, European investors, and the whole range of small family offices to foundations to large institutions. We work really with a large range of investors. And so the question you pose tends to be a very important question, which is, what types of capital are out there, all under this big realm of this word called impact investing that everyone uses these days. Multiple types of investors, regardless of the type of money they have. I think they slap the word impact investor there. So you're right to start with kind of, what is impact investing and what falls under impact investing. The range of money that's out there largely is based upon intention of that money. So as you rightly pointed out, there's a spectrum of intention of people's money. So if you start all the way at the philanthropic capital, the primary intention there is philanthropy. After that, you have what you call impact first capital, where the intention is to make investments that actually do have a return, but where the return is not the primary goal of making the investment. It's actually the philanthropic purpose of making the investment. If you keep going along the spectrum, there's just an array of further colors. After impact first investments, you actually have financial first investments. With financial first investments, as the name suggests, impact investors make investments, but their primary motive is to secure a substantial financial return, but they do that while making sure their investment also has some social impact. But the financial return is the most important piece. If you keep going down the spectrum, there's actually a few more flavors of capital. People talk about these days in international markets SRI investing, and in that case, there is money that is focused specifically on making a return. The goal is to make a return. The primary goal, just clearly without any doubt, is to make a return. But there's no specific intention to have impact. Rather, the goal is to make sure that people are not doing bad things in the world. So, for example, investing in a coal plant that has very kind of detrimental environmental impacts. A lot of the world, a lot of institutional money is saying that we are going to start doing SRI investing, which means not necessarily investing for explicit social impact, but making sure to avoid bad things. And along these lines, there is also kind of ESG investing, where you're actually investing in companies that have good social and environmental governance. So there's a little bit of positive intentionality there, and you are staying away from the bad things. So all the way, there's a full spectrum, all the way going from philanthropy, impact first, financial first, ESG, SRI investing, and then at the end you end up with just pure play commercial investing. But we're obviously hoping that more people will shift now into, if not ESG and SRI, into direct intentional impact investing itself. And that is the goal of our sector. That's the goal of my investment bank, and that's the goal of many of the people who work around us in our ecosystem.
Excellent. I think that's a great start to the whole thing, and clarifying the doubts in the minds of the people as to what are the different shades of impact money available. Preet, I would love to start at a very macro level as far as impact capital markets are concerned, and where they are moving, especially globally, and then with respect to India. We understand that, and there are various reports, various numbers, that is coming across, and there are numbers to the tune of $500 billion required in terms of impact and philanthropic capital in India to alleviate different social issues. And On the other hand, there are enabling regulations also now coming in, not just in India, but across the world. And given the COVID situation, people want to make an impact, want to see things improve at the grassroots level. How do you see the future of impact capital market, both globally and then coming specifically to India?
Yeah. I mean, there's no doubt that there has been massive growth in this market. I mean, I'll say that India was actually one of the pioneers in starting or kicking off this movement around impact investing. Back in the early 2000s, going all the way to the mid 2000s, I think India did one of the best jobs at pioneering the microfinance model, whereby actual private equity investors could invest in for-profit microfinance institutions and prove that you can actually have both a financial return as well as a social impact. India had one of the most robust microfinance investing markets, and ultimately, many other places followed. So Southeast Asia, Africa, and Latin America was very kind of robust in this sense as well. And after the proof that the microfinance industry offered that you can make these private equity investments and have both this, what we call a double bottom line return, both a financial bottom line and a social bottom line, things started expanding in terms of other sectors. So now healthcare, you mentioned healthcare at the opening of this of this session. That is becoming an area with increasing attention. Agribusiness, renewable energy, I think these are all very robust sectors. People are now also doing quite a bit in education, water sanitation, and probably the newest area is climate finance as well. And so the market has broadened in a huge way. The market has deepened in a huge way as many different types of investors have entered the market. During our microfinance days with India and the rest of the world, it was mostly government investors that were leading the way. So people like the CDC Group, the UK government's investment corporation, FMO, Proparco, many of these institutions were leading the way. I would say since around 2010, we have seen the entrance of a large number of other investors. The last decade has shown just a great deal of progress. We have actually seen foundations learn how to get away from grant making and actually make investments, related to our spectrum. They make impact first investments is how they typically label themselves. We have seen family offices, a lot of private wealth investors make investments. We have seen institutional investors, large insurance companies, other financial services institutions make investments. We're starting to actually see large pension funds now with massive amounts of capital make investments. And there's just been a whole range of people who are now entering this space. But we're at a critical juncture now. And, everyone is now thinking about less how to bring in more incremental amounts of philanthropic / impact capital, and people are asking, how can we tap the mainstream markets? That is the big question that the impact investing industry is asking. Within these private markets, with people who have an impact intention, there is billions of dollars of money. As you yourself said, India has mobilized a few $1 billion in the last few years. But people are now asking, how can we make that tens of billions and hundreds of billions and maybe even trillions of dollars one day? And the only way to do that is to separate the differentiation between investing, commercial investing, and impact investing. The idea is to say that one day there will be no impact investing industry, that all investing should actually be keeping kind of the social good in mind, and we should separate this thinking about making money and doing good for our world. So that's I think the new paradigm that people want to shift towards, and that brings us to the question: where is India now in this kind of juncture of mainstreaming capital markets? I think again, India has just been a pioneer. They've been a leader in mobilizing capital towards these kind of social impact investment opportunities. We've proven, because of our entrepreneurship ecosystems, because they are so strong, we have proven so well that the model works, and we've attracted international investors. We've started to attract domestic Indian investors. The innovation, the business model innovation that we have proposed, that we have achieved, is really world-leading innovation. The problem, though, now is a lot of people have seen how much money has flown into India, and impact investors, the more philanthropic, the impact first type investors, they are now starting to pull back. They're seeing that India is doing well for itself, that it is already mobilizing great amounts of capital, and their position is that they would actually rather send their money maybe to more difficult regions of the world. Maybe that's Africa, maybe that's Southeast Asia, maybe that's Latin America, the more underserved areas. At the same time, I think the larger European and US institutional money, the really large sums of money, they're coming to India. They're looking at India. They're growing into India, but that growth is very slow. I think that growth will still happen. The very large amounts of money will take a long period of time, I think, to grow, because India will still always be an emerging market with emerging market risks. So with philanthropic investors slowing their investments in India, with the very slow growth of institutional money coming into India, the question for India now is, how do we sustain our growth of social impact investments? And the answer to that is making sure that we build better infrastructure, better products, and actually do innovation now in India. I think India has had it very easily because our private equity markets have been so robust. Everyone has just been dumping money into private equity funds. You start a limited life fund, a standard limited life fund, you raise capital, you deploy that. But that model itself can grow only so much. I think to be a little bit critical, I think India has been a little bit slow in terms of innovating, in terms of saying, how can we move into the capital markets? How can we use philanthropic money in a different, more interesting way? Because if we don't use it in a more interesting way, it'll pull out. The philanthropic money will not be investing in the private equity funds in a growing way. So India is at this juncture where we have to think now about how we innovate. And I can talk a little bit more about that, Kapil, but we'll hand it back to you to see what direction you want to go in from here.
Excellent points, and tracking the whole journey on impact investing. That brings up on a couple of issues to talk about. One, obviously, is what needs to be done to enable this from within India, and our own Prime Minister wants the whole country to be Atmanirbhar, but depend on somebody else from outside. So obviously we have a social stock exchange in the making. That's one of the things. Enabling regulations are coming in. Also on the other side, on the supply side, I guess the issues would be, when does India see its first social enterprise unicorn? Mm-hmm. We produced a few private equity based and venture capital based unicorns, world beating unicorns. So when do we see that? And what does it need to take that? What's your take on these issues?
Yeah, Kapil, I like the fact that you brought up the supply side issue. You brought up, I think, both the supply side and demand side issue. And let me start with the supply side, because I think that's very important. Going back to the last mention I made, India has been very, at least in the impact investing space, that we've been very focused on these private equity models, and it's time we expand. It's time we expand that, and we can learn from international markets in this way. In other markets, I think because I'll say maybe in the US and Europe, they have had a little bit of a lead on us in terms of the sophistication of the capital markets there, and they have actually started innovating in ways that address the social good. I think it is time for India, because we're in already such a strong position, to push our thinking on how we mimic some of the successes in other places. So for example, one of the things that India can start doing is to build different products outside of these just standard private equity funds. One of those products could be, for example, sustainable mutual funds. If we are to actually start mobilizing and accessing large amounts of mainstream capital, we have to build products that are suited to mainstream capital. So actually kind of well diversified, highly liquid products. And the mutual fund industry, I think, is prime for this. If you look in the United States, there have been sustainable mutual funds for the last several years. So a group called Calvert, for example, has created one. A group called Pax World has created one, to the point where me, with my retirement money in the United States, I can choose these funds to actually put my money into. So the retail investor, the individual investor, actually has access now to investments that are, provide sustainable opportunities. India can, we have an easy pathway to do that. We have a mutual fund market. We also have a very just kind of a robust and emerging sustainability, market as well. And to combine the two, to mimic these successes from the US would be, I think, would be great.
Our social stock exchange as a trading platform.
Yes.
Price discovery and other things can also happen.
Yes, and let me I'll talk further about the social stock exchange. I think that's an excellent point. Just one more mention is just around going back to capital markets. It's around sustainability bonds. India has already started leading in the green bond space. I think we're very far behind countries like China and some US and European countries, but this is an area where we can start innovating, actually putting out products in the capital markets that focus on private sustainability of corporations. I think the returns, the yields could be very appealing to investors, and we can tap large amounts of capital through that. So new products is one thing. What you bring up relates to almost new infrastructure with the social stock exchange. It's an interesting proposition because one of the biggest challenges in the impact investing markets is actually liquidity. The ability to be able to raise capital and trade the ownership of that capital. As of now, capital does not have a great amount of difficulty entering opportunities, but it has a great amount of difficulty exiting those opportunities. Okay. A social stock exchange would essentially make everything tradable. It would create a secondary market. It would create liquidity. This is the type of infrastructure that India should start pushing itself to innovate on. We are a prime country for innovation. We have like you're saying, maybe we don't have the biggest unicorn yet, but we have a lot of tiny unicorns. We have a lot of companies that do extremely well, that are raising, Wall Street capital, other capital. But it's time we just, we start seeing how can we use those success stories to build better infrastructure in our space, and using these companies in a social stock exchange setting to be able to trade ownership in these companies or trade financial instruments, I think is big. We should not be dishonest with ourselves. The social stock exchange idea is a difficult idea. What you need for a social stock exchange is a very efficient rating or valuation system. You have to constantly be able to track how much a company is worth, or how safe some debt in that company is worth. How much the equity is worth, or how safe the debt is. And that's a very difficult thing to do on a regular basis. You actually have to standardize the social impact that the social stock exchange companies are generating. It's a very difficult problem to do a complete standardization when different companies are working in very different areas. One could have social impact in in the water sector, another can have it in the financial services sector. To compare the two, it's a very difficult proposition, but that's something we have to try for. And also just this liquidity issue. If you buy certain shares in a social company, a socially driven company, will the social stock exchange allow you to sell those shares easily to someone else? Because if there's no liquidity, there's no exchange. And so that's critical.
It has to be market making.
There has to be market making. And so what the social stock exchange is trying to do is actually take all of the core problems of the impact investing world, valuation, impact measurement, liquidity, and try to solve it in one piece. That is not an easy proposition.
I would say the issue of transparency as well, Preet, given the way issues have happened, the main headline about Amnesty International and the way they're spending their money in India. I get there is a big issue about, foreign, philanthropy or capital, and the transparency in terms of the user purpose. I guess this should alleviate some of those issues as well.
Yeah. Transparency is not an easy thing to deliver for companies because there's a very high cost of providing transparency, to provide reporting, to have audits done. A lot of social enterprises, whether it's nonprofit organizations or companies, it's a burden for them to be able to constantly report back to investors. So these are a heavy set of challenges, but again, I think India is very well positioned amongst many other countries, very well positioned to prove this on a larger basis. I think what we should not do is try to bite off too much with the social stock exchange. We should not, for example, try to load in every type of company, every type of instrument, seek standardization of impact to the max, seek transparency to the max. You cannot do that at the outset. I think in planning for the social stock exchange, and there's a lot of very capable organizations within India who are working on this now. Asha Impact, for example, Avishkar, just a number of different people. I think what they should think about is staging this. Can we start with one type of organization? Maybe it's only nonprofit organizations, and maybe it's only debt instruments, loans to nonprofit organizations, and just build it up that way. Or maybe it is just a pilot project around equity into for-profit companies or Section 8 companies, whatever the case may be. Or it could be at the fund level. For example, with AIFs, there's so many fund managers now in India. Can you do this with AIFs? I think it'll be critical to say, what is our starting point? What is the best starting point? How can we start narrow, and how can we prove the model from there? But I agree with I think you said the Oxfam CEO that it is a little bit dangerous, but it's a little bit difficult. But it's only difficult if you start it in the wrong way. But I think the people in India working on it are aware that you should not bite off more than you can chew.
Valid point, Preet. One of the things that we have been also deliberating, Preet, in terms of the direction and what to include, what not to include, the whole regulation. And I would not want to restrict this to just the social stock exchange, but the whole sector per se, the social sector. Mm-hmm. And one of the things that we personally have been feeling is, the skill set supply. Mm-hmm. Yes, we have done a good job, across different, investing, entrepreneurship, staging, and regulation and whatnot. I think it's time also that we also create a depth around, different, skill sets, to increase both the width as well as the depth of the whole sector per se, and that too at the grassroots level. Yeah. How do you feel we can go about it? Secondly, are there any good models that you've seen across the world that we could probably look at and probably learn to innovate upon? Yeah.
Another good question, Kapil. I will say that the one thing that is very important with impact investing is that there is the impact investing industry in India is that there is a strong distribution of capital. So capital is needed all the way from seed stage investing and angel investing and early stage investing to growth capital, all the way to large private equity, all the way to these capital markets types investments, these large bonds, these mutual funds for equities, the social stock exchange in between to be able to facilitate across some of these different asset classes. So India has always had, I think, to your valid point, India has always focused, as mentioned, in this kind of private equity space, and it's much money has been coming there. The question becomes, how do you distribute the money across and make sure the right types of money, the philanthropic money, is maybe going to the early stage investments or the angel investments, and the big mainstream Indian institutional money is finding its way into buying things like green bonds or sustainability bonds or mutual funds, for example. And you're right. The talent piece is very important, right? The skill sets, because people working in the institutional markets, people working in the angel markets, I think everyone needs to understand how to go and access some of this impact investment money. I think overall it will happen naturally by itself, but I think the way that the industry can simply promote this is sending some of the people now who have been working in impact investing for the last few years in some of our traditional impact investment funds, in the low capitals, the Avishkars, working for Unitas, for example. They should start going and hopefully finding themselves in the capital markets arena to actually kind of push their experiences into other places. It's already starting to happen. I think a few, we see a lot of talent coming in and out of this impact investing space. I think what will happen over time is more and more people will spend time working in impact investing. They will find themselves elsewhere. And we will bring our experiences here, and I think just through the distribution and the spreading out of people, I think awareness will spread into different areas of investing, and hopefully we really find more people working in the institutional world that have had impact investing experience, and I think that will change things. And you see that here in the United States, for example. People now, if you go to a global impact investment network conference, you actually have people from, BlackRock, one of the world's largest asset managers, right. KKR, all of these different, UBS and their actual private capital markets people interacting with people like me who are really just limited to the impact investing space. And now we're starting to share ideas, knowledge. We are no longer two separate sectors as such. We're actually starting to commingle. You will see that the chairman of the board of the Global Impact Investing Network now comes from Prudential. He's the chairman of Prudential. And so now we are seeing people from the commercial space enter our space. We are seeing people from our space enter the other space. All in kind of the United States and Europe, and this should happen in India. I think it is starting to happen, but hopefully this commingling of people itself will breed more cooperation, collaboration, and really it'll bring impact investing to the mainstream and mainstream to impact investing. That's the hope.
One quick question from the audience. We have had this SKS microfinance scam. We started talking about microfinance, and we had a couple of private equity, and then it went public, and then this whole issue. How do we avoid such miscarriages in this whole journey to build up an impact capital market in India? Have there been certain experiences like the Lehman type of crisis that you've seen in impact capital markets abroad, and how was that plugged? What has been the experience? Because people on the ground have got spooked around microfinance after the advent of SKS fraud and all whatever has happened. What's your take on that issue?
Yeah. Thankfully, I have not seen a Lehman-like Lehman-like what would you call it, a implosion yet in the international markets, but. The issue, I think, or the answer to this is quite simple. This is very much about, as you yourself mentioned, Kapil, transparency and good governance. The positive around this is that transparency, or at least I'll say good governance and open transparency is generally free. It's at least good governance is free in terms of there's no big cost with good governance. And I think this is it's an important and interesting point you're bringing up, because this is an area that impact investing also needs to take up. So being impactful is not only about driving a company to reach more of the underserved population. Impact investors also have to see themselves as people who are going to foster good governance within companies. And thankfully, I think till now those large government investors, CDC, FMO, Proparco, they've always been very, very strong on good governance. So I think with their entry into the sector, they've done well. Now it's also time for other people to make sure they're just as strong on good governance. Making sure that boards are actually functional, that they're actually active, that they are actually participating in the company's operations, that there's actually good systems, there's no conflicts of interest. These sort of things, it's very easy to ignore these types of good practices. And so it's very important, I think, for rightly as you're saying, because there can easily be mistrust. If there's if there's a few more SKSs, that can bring the sector back by 5 years. It can heavily slow down the growth of the sector. So not only, I think it's an excellent question. Not only is it important to bring more capital, but make sure that capital is deployed in a very, very responsible way. I think overall, investors are paying attention to this. Investment managers are paying attention to this, especially international investment managers coming into India. I think a lot of them, because there is emerging market risk in these countries, they do promote good governance. And so I know what happened with SKS was, it was a little bit detrimental for the industry, but correct. We should also acknowledge that we have had many other SKSs. We've had dozens and dozens of other companies in other sectors, and we've seen also just a lot of positive transformations in those companies, better boards, better governance, better transparency in a lot of companies. So we should also acknowledge that the impact investing sector has had a positive governance effect on many companies as well.
Let me just touch a little bit about innovation.
Yeah.
And fine-tuning the product to the needs of the impact sector or the social impact sector. You see, one of the motivations we started doing our REIT was providing perpetual capital to the healthcare industry. Unlike private equity, which has a certain tenure, limited tenure, and it's a long gestational industry, building infrastructure on the ground. Similarly, social impact and transformation takes a hell of a long time and needs a lot of patient capital. Mm-hmm. Very recently, there was a private equity fund which is a very long-term fund of 25-30 years. We're seeing that innovation happening. Yeah. So that both the investors and the investee don't have the pressure and are able to deliver the right growth and not under undue influence of the investors to miscalculate and misjudge the growth of the enterprise. Do you see some such innovation on products and investments also likely to happen in the future, as we are talking about future of impact capital? Is it also going to happen, and is it going to be also custom made to the needs of the social enterprises?
Yeah. I think Kapil, this is an another excellent question from you. And I would say India in its impact investing sector can do a little bit more work. I think because we have had so much capital flow to us, again, and I know I'm repeating this, but in the private equity world, We've had so much money come in a relatively easy fashion because we've done well. We've had a robust sector. I think we've become a little bit lazy on mobilizing capital, more kind of patient capital, as you're saying, more flexible capital, because there are a large range of enterprises out there, nonprofits, companies that may not produce spectacular financial returns, but they will produce some returns and they will have very strong social impact. And so the impact investing sector is just not only about sending more money to private equity funds and generating higher returns with some social impact on the side. We have to make sure the distribution of capital is even, that capital is coming into these other, as you're almost implying, impact first enterprises. And it does take innovation. Innovation in structuring, exactly as you're describing, to be able to bring money into those other kind of less underserved impact capital sectors. And so what are some of the things that people have been playing with? I will say that one thing that has been experimented with is open-ended vehicles, for example. But they have always been a little bit challenging because there is no impetus to provide an exit. You know, as you described kind of when you just started, opened the question, perpetual capital is very unattractive to investors for understandable reasons. And so, you know, people have, I think, put that innovation aside a little bit on in the impact investing industry. But I think the new space that in other parts of the world have been coming up in a big way is blended finance. Essentially, mixing private capital and return-seeking capital with more philanthropic capital. You've seen these models do very well in places where it needs to do well. So across the continent of Africa, for example, Africa often in many sectors doesn't quite have the same financial performance that that Indian companies show. And so they've had to get more creative. They've actually been forced to innovate. And so in a way, you see more of these blended structures, more of these creative structures, whereby, for example, in one fund, you will have a double layer structure where there will be a philanthropic investor and a more private or more commercial investor.
And for-profit.
More for-profit investor combined, where the capital is actually combined in one structure, and different layers or different segments of capital will have different risk return profiles, essentially where the philanthropic investor will take more risk. But in taking more risk and mitigating the risk for a commercial investor, they will bring that commercial investor's money in, which will expand the social impact. So the philanthropic investor wins because they're mobilizing more capital for the social impact. The commercial investor wins because they are receiving a reduced risk profile. So this type of innovation has been happening kind of across the world. But you see it a little bit less in India because, again, we've had it easy. We're the darling of the private equity suppliers world. So everyone wants to just give us the money, give us private equity, and we haven't started to blend capital, for example, and do the tough work around blending and do creative structures. But we have so much potential. Just the other day there was an enterprise that said, we make. They came to me. They're based out of Hyderabad. They said, we make 5% returns, but we impact thousands and thousands of farmers, and we have the ability to scale. The scale will be there, but only at 5% returns. How do we bring more money? How do we use a blended finance model? And honestly, in India, there being blended money. There's a lack of awareness around blended finance models. I was at a conference recently, and a very successful Indian impact investment fund manager in the agriculture space, he wasn't even sure what blended finance exactly was. Whereas, this was the main topic of discussion in US conferences and European conferences. So India still has, for some reason, I think we have to go back and make sure that we are innovating as well. And we're starting to bring in these different structures. I mean, a lot of the philanthropic investors who are interested in India, they helped to launch our impact investing industry. But now that they're seeing it's so competitive, it's so robust, they're actually pulling back out. we should bring them back in by saying we can actually give you a new opportunity in blended finance to bring your philanthropic money back into India to have deeper impact. And that we need to go back and say, let's start innovating again, because the job is not done. The job is far from done, and we have to improve our distribution of capital. We just cannot sit tightly with this private equity money, this impact private equity money, this financial first impact private equity money that comes so naturally to us.
I think, Preet, excellent points there for us and the audience to take away. Preet, I want to ask you a few personal questions. I'm sure it's going to motivate a lot of people who are also wanting a career in this space as well, right? So, Preet, what's your prime motivation to be in this sector and doing this thing? What makes you tick? Why did you come into this sector? Unlike what you mentioned, somebody in the agri and he didn't even know, and he didn't want to even or didn't even upskill himself to know that there is something called blended finance, and he could risk mitigate to invest into the agri sector from his fund. So, what drives you? And I think that's and what motivates you to be an impact investor? And be in this sector.
When I first joined Lok Capital, it was simply about a career curiosity. This was back in 2007, so 13 years ago. This was something that was just a little career experiment. I thought nothing of it. I thought I would spend a short amount of time doing this and then maybe go try to work for the World Bank or something. This whole investing space, the social investing space, we called it back then, the word impact investing had not even been coined. It was just called social investing. It was still all a big experiment. But I mean, what I would tell everyone is, once you come and be a part of this movement, it is very difficult to go back. What makes me tick in this space, Kapil, once you start seeing the social impact, once you actually, you actually put aside the financial structures, the term sheets, the shareholders agreements, and you actually go and see what's happening on the ground. You actually go spend time with, whether it's microfinance institutions, agribusinesses, healthcare devices, anything. Once you see the innovation that's happening, you will never find a more exciting space than this. The innovation is happening both on the ground in terms of the types of business models that are arising. The innovation is happening at the financial level. The innovation is happening at the ecosystem level. Different players are coming in. Investment banks such as us are setting up. You're seeing rating agencies coming up and playing the space. You're seeing mutual funds try to innovate. BlackRock is asking what they can do. The ecosystem level is changing. The structures are changing. As we said, now blended finance is coming up. We're thinking about the social stock exchange. We're thinking about new types of outcomes-based pricing on sustainability bonds. There's just a massive amount there, and then the healthcare business models, the agri models, the financial services models, the fintech models, the agri-tech models. What's happening in forestry now? What's happening in blue bonds in oceans? It's just amazing, right? It's overwhelming. It's overwhelming to see the innovation and to have. If you just come and taste this career, if anyone just comes and tastes it, to be able to step back and then go do your job in commercial private equity markets or wherever the case may be, it's just unfulfilling. Once you come in, I don't know, it's very difficult to step out. And so what is my motivation? I mean, my motivation is I could never go back. I just don't have a choice. I can never go back to working in the commercial world after seeing the excitement and the impact that's here in this world. So. And the interesting thing and the important thing to tell everyone is, when I first joined Lok Capital, this industry would pay like the, compensation-wise, like the nonprofit industry. Right. Maybe in some cases, not even that much, but we've come such a way that you can actually have a kind of, the compensation, the actual kind of career experience and your lifestyle is actually, there's no compromise needed anymore. And so just from a personal point of view, it's all just personally, professionally, it's all extremely workable and it's extremely attractive.
That's a very powerful message, Preet, to people who have doubts, and that is the reason of me asking about the skill supply. It's just the label, the perception issue around this whole sector and investing in this sector. I guess that's a very powerful message, and I think you've cleared a lot of apprehensions or a lot of young budding people who want to enter this sector as well. Preet, before we wind up and we summarize, I would love to kind of get your take on what's going to happen. This 500 billion requirement in India. Are we going to really meet it in the next 5 years or 10 years, whatever these reports are talking about, or it's just again it's a report and these numbers have been done, but there's no grounds up reality check to these numbers by various think tanks and all these organizations. Where do you think is the reality check for us in the future?
Yeah, Kapil, you're asking difficult questions, but my perspective is very optimistic. I think we will meet it. If you look back in 2000, 2007, 2008, there were a lot of funds that were $25 million in size, $30 million in size. You look maybe 5 years later, those were $50 million, $75 million, $100 million funds. If you look now, you're actually seeing some funds, like Leapfrog Investments, they're raising hundreds of millions of dollars. Our industry is no longer niche. It has already now started to pick up momentum, and it's picking up massive momentum. So numbers that we would have never imagined in 2007, 2008, we're hitting those numbers. So, people are starting almost nearing, it's very niche, but billion-dollar funds. People like KKR, people like Temasek, all of these large large private equity people, TPG has started an impact investment fund.
Right.
They're all getting in with massive amounts of money now. And if anyone here attended the GSG Summit, kind of a major flagship impact investing conference, the CEOs of many large companies are coming and speaking. You have Danone, for example, talking about how you have to live and breathe impact. This can no longer be a niche sector. And so you're actually now having the leaders of the world talk about impact investing. You're having the leading private equity funds set up impact investment funds. You're having people who own mutual funds now set up impact-oriented mutual funds. And so we are already edging into the commercial world. We're already starting to pull them in. It's just a matter of time, Kapil. I think it takes a little more innovation, a little more persistence, a little more, like you said, commingling of skill sets, and we will stop the separation between the impact investment industry and commercial industry. I think we will start commingling, and we will all slowly become one in the next 10 years. I don't think we're very far off. So my outlook is very optimistic.
So actually that brings us back to the point. I think the future is that there won't be this whole dividing lines between commercial impact and all the shades of impact maybe in future, and perhaps there would be a Davos of only investing, no social and for profit, and maybe in 10 years time the way the world is moving and the way things are moving and people are opening up their pockets. Preet, it's really a pleasure. I'm afraid we've come towards the end of our talk. It's really been a pleasure, engaging and talking to you on the show. Before we leave, any parting comments, Preet, from your side?
No, the only thing is, hopefully all of the young members of the audience are listening to this, and as they're thinking about their careers, they're thinking about impact investing. I think the future generation is the key to removing this distinction between commercial investing and impact investing. All investments should become an impact investment, and it is up to kind of the youngest people entering the workforce now to make that happen. So hopefully they're listening. They hear this, and I'm always there if anyone wants to connect on LinkedIn or otherwise to talk more about the industry.
Preet, it's been a pleasure talking to you and a real insightful talk. And as well as, given the depth of your experience, it's been fairly valuable to the audience that we had live today. And as we grow across to our podcast audiences and listeners across the world, I really need to thank you from the bottom of my heart and my friend Lysander, who connected us together. And over the last few weeks that we have been interacting, I got to know a lot more in depth about you and the work you have done. It really impressed me a lot. I'm a novice, I just focus on health, education, and a couple of sectors. But what you have brought horizontally across both the East and the West side of experience on the talk has been very motivating. I need to thank you. And before we sign off, I would love to just make our audiences aware. Our website, www.kapilkhandelwal.com, keeps coming up with announcements on our future podcasts and our recordings. So I would urge you to visit and look at all the material available. Please feel free to write back to us and provide your feedback. With this, we sign off with another episode of Quote Unquote with KK. Thank you so much, Preet, for a really engaging talk and very motivating for the people looking forward to this industry. Really blossom. Have a nice day.
It was a true pleasure, Kapil. Thank you.
Thank you. Bye-bye.